All right, let's begin the show then by putting the spotlight on Narayana Murthy-backed company that supplies parts to Boeing, and that is contract manufacturer Aequs. They have raised a fresh round of equity of about 448 crore rupees. That's led by Amansa Capital. Joining in right now on the show is Aravind Melligeri, who is the chairman and CEO. Thank you so much for taking time out. Congratulations on this fundraise, and tell us who all the investors are that are participating in this round of latest funding.
Thank you. This round we had led by Amansa Capital, this Singapore-based fund, and followed by Steadview, along with Catamaran Ventures and Sparta Ventures, which are the family of Narayana Murthy and Desh Pandey. And we had other smaller investors to join in also, and existing investors also participated in the round, which is Amicus Capital.
Okay, fair enough. So what is it that you're going to use this, the fresh fund infusion for? I understand that it's going to be more towards technology products.
Yes, Aequs currently is a significant contributor to the aerospace manufacturing in India. Aerospace components, precision machine components, we pretty much 100% is exported. We have been doing this for the last 15 years. And this round of funding is going to go a little bit into aerospace growth. And also, we are launching a new vertical focused on the consumer electronics components, precision machine components for the consumer electronics business. And this is also going to be funding to launch the vertical. And we already have established 200,000 square feet facility in Hubli, where we have a consumer durable cluster. And it's going to be expanding that location to add about 1,200 people in the coming year.
Sure. Just for the benefit of our viewers, Aravind, if you could walk us through what exactly the company does. Of course, it's a precision components manufacturer. Take us through, which are some of the companies that you supply to, how you work very closely with aerospace players as well.
Yes. Aequs, we started about 15 years back doing aerospace components, predominantly works significantly with Airbus and Collins Aerospace, and we have customers like Safran and Boeing working with us. And so we do all, more than 3,000 components, predominantly focused on the aerostructures, which is basically fuselage, and then also the landing gear components, wing components, and also the engine components. Today, we make Airbus A321 or-wing emergency doors out of Belagavi, where our special economic zone is there for aerospace manufacturing, and door plugs, and we make for the Airbus A321 also, and we make landing gear components for A320, for example, and also the wing components for the various other aircrafts. So I think we are a very diversified manufacturing. We have built a first in-country, high value added. We have first 100% in-country value add. In terms of all the way from aluminum, we're able to manufacture to the finished product in country. This is the first time it has happened in the country, and we're able to deliver the wheels for the aircraft from India. Today, we deliver more than 5,000 wheels every year to this industry, and it's a uniquely developed over the last 15 years and out of Belagavi. And we have two joint ventures here, one for forging, one for surface treatment. So it's build an ecosystem to increase the in-country value add for the aerospace industry. And we are the largest precision machine components manufacturer out of India today to the world. And most of our work is exported. 100% of work gets exported because there is no commercial aircraft manufacturing in India today.
Okay, good to know. And what's the long-term game plan as well? Because I understand that you are really looking to focus on, Indian manufacturing as a story, which everyone says we're now in the manufacturing renaissance. How are you really looking to maximize this opportunity and grow the company down the line, given that almost 100% of your revenues comes from exports?
Yeah, if you really look at our journey, has been focused on the manufacturing. We believe in India's strength is engineering capability, and second one is the high availability of low skill, unskilled labor. So our aerospace and also the new vertical which are launching advanced technology products are focused on leveraging the engineering strength of India. And it is basically, we believe India has a significant engineering capacity and capability to deliver engineered products to the world, and that's what the aerospace industry is. And we have been growing, a significant growth we had last 15 years through COVID. During the COVID, we did obviously aerospace industry took a hit, and since then we have been growing almost 30 to 50% every year, and we continue to see that opportunity through 2030, because if you look at the industry order book is extremely large. The customers like Airbus have more than 10 years of order book complete. And so that translates to a visibility for us as a suppliers of nature. And that basically helps in this activity. And so this is basically translate back into the current challenges. We also geopolitical challenges, and also the focus on India's growth comes from consumer electronics industry, which has come back into India, and we want to be part of that. That's why the new vertical has been launched, and to support that industry to see the realignment of the global supply chains coming out of Eastern Asia more towards India, as you said, manufacturing renaissance, which is going to be the leverage what we will be playing with right now, and leveraging that to make sure that we can be part of that industry. Today we are not in that vertical at all.
Okay, and what about the kind of manufacturing facilities and operating units as well that you have? I understand that there's 5 operating units in Karnataka's Koppal and Hubli cities. This is for the non-aerospace business. How much is that of your total revenues, and how are you looking at building your further manufacturing facilities?
Today we have over 13 operating units in aerospace, and about 5 operating units in non-aerospace. And also we have 2 aerospace units, one in France and one in US operating. Today aerospace contributes 80% of our revenue, and 20% is non-aerospace. We expect that to continue to be that way. And most of this is close to 3 million square feet of manufacturing facilities, what we have in our 3 zones. One is an aerospace zone in Belagavi, one is a toy cluster in Koppal, and the third one is a consumer durable cluster in Hubli. And the new vertical we are launching, advanced technology product vertical, is out of Hubli. We already have a first 200,000 square feet facility already up and running there to support our new vertical.
Okay, how much have you raised so far? If you could just walk us through, and are there any more fundraising plans on the anvil? What's the overall valuation looking like?
Last round we raised in April, we raised about $27 million, including the existing shareholders investing. Amicus Capital led that round. And this is the second round of our raise, which is $54 million approximately raised. And I cannot talk about the valuation being a private company. And we feel very good, comfortable with where we are as a business. And we have invested, over 1,000 crores in the past from ourselves before bringing on the investors on board.
Okay, fair enough. Won't really probe, but let's talk long-term vision. Where is it that you see the company over the next 3 to 5 years?
We see a significant opportunity for manufacturing out of India, and we have believed this from a long-term perspective, and that's why we have invested heavily into these industries. And we see over the next 3 to 5 years will be a public company, and we're going to look to go IPO in 26 timeframe. And also we are significant growth coming in. Aerospace is going to double in next 3 years. And our new vertical is going to be as big as our aerospace in the next 3 to 4 year time frame. So we feel very strongly, strongly about how we see ourselves in growth in next 5 year time frame, and also we'll be a public company by then, in my mind.
Wishing you all the very best. Thank you so much for taking time out and joining in.
Thank you.
Let's slip into a very quick break right here on Startup Central. Stay tuned. We've got lots more on the other side.